What's up, traders, and welcome back to M.I.C FOREX training. Now, thank you for those who are watching our videos. Thank you for those who are subscribing. Though slow, but we know we'll be there. We just started and we are moving on well. So now, today, I want us to progress with our class where we stopped yesterday. Try to do more. Try to see if we continue building momentum. And just to mention, we have already taken this trade. For those who want to work with us, you can visit micforex.co.ke. That's my website, and everything is being explained there. However, I may not talk about this setup right now because this is an advanced concept. But for now, let's do something on the beginner class that we started yesterday. All right. So yesterday we said that. Or the previous video, let me just stop saying yesterday. The previous video we talked about types of traders, and we could say that we have four types of traders, four types of forex traders. All right, not mango traders, not potato traders. So number one is scalping or scalpers. Number two, we have intraday traders. Intraday, I think we have some hyphen there. Number three, okay, this one you can also call them day traders. Number three, we have swing. We have swing traders. Number four, we have position traders. I gave a definition and expectation of all these four. So that is if you have not watched that video, you can just go and watch it. It is very easy for you to be able to know which type of a trader you are. Now, I want us today to look at something that is very important in Forex, especially for beginners, and this is called the types of market analysis. As I said, I'm going to give this training or these videos in a chronological order from where personally I suppose that the beginners should begin at, going to to medium, also going to advanced concept. So if you're watching these and they're a bit boring because you are top there and you needed some advanced concept, I still got you. But for now, let's deal with the huge number that is now just beginning. So types of market analysis, we have technical. We have three. Yesterday I talked about three. We have technical analysis. I'll do that technical like this. Technical analysis. We have not mechanical. Someone is saying to me mechanical. We have technical analysis. We have fundamental analysis. There's nothing called mechanical analysis. Fundamental analysis. Number three, we have sentiment or sentimental analysis. You can just call it sentiment. Sentiment analysis. Today I want to give a very easy one. Okay, easy doesn't mean that it's going to be to be applicable or is going to just make you one tomorrow, but I mean it's not complicated. Easy here means not complicated, it's simple. Let me remove the watermark so that we can have a clean working space. Let me remove the watermark like this. I explained this yesterday. I explained this in my previous video. I think I should learn how to use these words, previous and not yesterday. So I have to set my board very clean like that. Good. Now let me start with the technical. The technical, we can I'm going to tell you a very interesting story here, technical market analysis. So this is like I said yesterday, this is the use of the skill, the use of the know-how, all right, the use of your brain, totally using these tools. You have trend lines, the Fibonacci, the market entries, we have rectangles here, branch, arrow, all this. So we want to see how they can help us determine our areas of interest. So this one I would further break this down into indicator analysis, price action analysis, and also what majorly today is being called the smart money concept. Okay, so I'm going to be saying this. Let me put my phones off. Some people are just disturbing me. All right, so this one we can divide it further into, like I said, down here we can have number one, use of indicators. I'm going to be taking you through this, although I don't use a lot of them, but I'll give you some that are conversant with. I think I used indicators more than 2-3 years ago, before I landed another concept. So we have use of indicators. Sorry, this one should be use. We have price action, and number 3 I'll talk about smart money concept. I know here we will differ with so many people, but that one does not mean that we don't know what we are doing, because there are people talking about the smart money concept, ICT, blah blah blah, so many stories. But what I can tell you, when we reach to smart money concepts, because we have several concepts that I will be taking you through, actually close to 20 videos, I'll be doing them one by one. By the time we are finishing, you'll be able to understand why I take them the way I take them. All right, so here that we have 3, then it is good that I can describe each one of them. Now, in my view, in my opinion, in my days of learning and understanding forex, I came to understand that use of indicators is the oldest model of markets analysis. It is the oldest view of traders when trying to learn and do forex. So in this, you're going to learn that it being the oldest, or the first one, let me call it the first market entry models, then you have to be able to learn how has it progressed. How has it progressed into price action, into smart money? It is only in M.I.C. Forex trading I'll be taking you through that, in my view, through my eyes. All right, so I'll not do much today about indicators. That will be for the future a video, but I will touch something on the price action. Smart money concept, that's a whole training. It requires more than 20 videos, like I said earlier, so that one I'm going to spare it for now. But you have to know this is the evolution. This is the evolution of forex trading strategies, according to me. All right, according to me, and the way I understand them. So one of the prepositions in price action is that market moves up and down in this manner. So you consider price that is moving in this criteria, or in this manner, in that manner. All right, of course, if for those who are doing their beginner lessons with me, I'll be describing to you what you call the derivation, how we derive the higher highs and higher lows. But let's just look at this market the way it is. I want to give you a very simple strategy that you can use when you are starting, and it can help you make some profit or even understand the process of forex trading without naming all this, because I know majority of the traders who are beginning might not know the derivation. Even those who are trading today, you ask them, why do you call them high highs and higher lows? With all due respect, they might have an idea or they might not have an idea, but for me, I'll be taking you through that in the future lesson. So for now, the price action just observes the market, and then they say that if you observe this market clearly, there's a point that the price does not pass above or does not break, and there's also another level in the price movement or price action that the price does not break below, until sometimes when it comes to break. But for this particular movement here, the price seems to be respecting this line. Are called trend lines. This line is called trend lines, and a market that is moving up is called bullish. I think I'll be covering that in the next video, which is market structures. So if this is a bullish market, bullish means to buy. All right, bullish means to go up or uptrend. So for you to be able to trade as such a market trend or market structure, it is to always look for buying positions, because you want to align your idea or your decision with an uptrend market. So you want to buy. So where are you supposed to buy? Supposed to be buying at these levels. You need to take a buy there, take another buy there, take another buy here. This one does not include so many semantics, so I'm not going to be breaking it down into time frame, into wait for bullish engulfing candles. I just want to give you the simplest one for those who are trying up and down blowing accounts. These are very simple and amateur way of trading. I call it amateur because it doesn't require any technique. You just need to know that this market is moving up. It could be and I really propose this one for scalpers in this particular amateur trading trading concept. You don't need to be greedy. Don't expect too much. So you can be using 5 minutes time frame or even 1 minute time frame. But for you to be precise, I would ask you to use 5 minutes or even 3 minutes. 3 minutes for your analysis. Check your trades in 1 minute time frame. I'm going to be showing you. So you'll be buying when the price touches here, and don't for you to understand how this concept works, you have to connect at least two points where the price has touched and reversed. All right, so number one, it is to identify the trend. Number two, connect at least two, then take the trade in the third one. Are you following me? Let me give you some notes on that. I think that is very important. So in this strategy, this is what you will do. Number one, let me give you what we call the SOP. SOP is standard operating procedure. Number one, identify the trend. Identify the trend. And this one works best in the lower time frame like that. You can use 5 minutes. Number two, what you need to do, it is connect at least two reaction points of the price using trend line. You pick it here. This is what you call trend line. You can open, then this Yeah, this is what we call trend line. You just place it like that. All right, so you use a trend line. So number 3, wait for the price to come to your pure high. Pure high is point of interest, or just to come to your trend line, for the that time. All right, now what you do, number 4, drop to lower time frame, which is 1 minute, which is 1 minute time frame, and look for a reversal. Candle. I'm going to be showing you how these reversal candles look like. So this one could be number 5. The reversal candles could be number 1, rejection candle, or number 2, what we call bullish engulfing candle pattern, bullish engulfing candle pattern. Then number last, which is 6, take a buy position, and target the next high. This one should be not more than 30 pips. Why are we saying that you take the buy? Because the market is moving up. While it moving down, then you would be talking about selling. So if this is 5 minutes time frame, what you need to do when the market now taps this zone for the third time, remember this is your first time, second touch, the third touch, now you drop to lower time frame now, and then wait to see something like this. This is what we call a rejection candle. Let me put my notes properly. Let me change this color a bit to blue. Correct. Now this is what we call a rejection candle. Remember, the color of the candle here doesn't matter. The color doesn't matter. If you see a candle pattern that looks like this is a very clear rejection candle. So what you do, if you see such a pattern, a candle closing this way, check the buy position at the close of that candle, that place. You take the buy position and you target this eye, and you target that particular high there. Put your stop loss there, then you target this particular high. This is going to be your TP. This is going to be your TP, or the take profit. When the market, or when the price comes to touch on that trend line on the upper side, this is going to be your TP. TP, I said usually in forex, does not mean toilet paper. It means take profit. Okay, so that's going to be your take profit. This is pattern 1. Pattern 2, what we call bullish engulfing candle. It is for these candles that were coming down. Remember, they are red, or they are selling. So if you see this particular setup here, all right, if you see that particular setup of the candlesticks, this one is now the bullish engulfing candle pattern. At the close of this candle, please check a buy position. So you have two market entry scenarios in this particular strategy that I'm teaching you. Yeah, you take your buy position at this point. I believe as at now you are following, and if you have any question, you can drop it to the comment section. You can be able to get a response from me. If you can also go to my website, micforex.co.ke. you'll get to find my handles. You'll get to come to my WhatsApp, and you can get one-on-one conversation about what you are talking about. One-on-one conversation about this particular strategy. Remember, I said this one does not need a lot of technicalities. It is an easy one, especially for the beginners. And I'm not saying that it is a weak It's a weak strategy. I used to do this many years ago until, you know, I've progressed until where I am now. So let's now go to, I think since you're watching this, the note is here, you know, for you. The illustration is here. The next thing it is now to go to the real market and try to see if this thing is going to work. So we go to let me tick my watermark like that, then drop to 5 minutes time frame, just like that, and then look at what I'm telling you about. Let's try to see, let's get, you know, a market that is bullish. So you can be able to draw a trend line here. All right, you can be able to draw a trend line there and another, you know, a trend line at that point. This one is not, yes, like that. For you to be able to draw a proper trend lines, you can use up to that moment. And then, so you see the market, you know, touches here, goes up, comes again for the second time. So for the third time, we want to manufacture an entry at that point. That is why we want to manufacture an entry. So you can drop to 3 minutes time frame. I think this one is going to be fair for the purposes of the class. And I said you need to look at the rejection candlestick pattern. Remember, this is our first touch. Our first touch is here. The market, you know, touches here. The first one, the second one, and the third one here. So we are waiting to take a buy because the market is bullish on the third touch. So it touches here, and the price gives a very good rejection candlestick pattern. If you can look clearly, this one is a rejection candlestick pattern. Remember what I showed you. Let's go back to my notes and show you. This is a rejection candlestick pattern. This one is a rejection candlestick pattern. Here is rejected from below because it has a small body and a very long downward wick, or very long wick to the downside. So actually I have already noticed that all the confirmation is already here. We have a rejection candle and a bullish engulfing candlestick pattern. Here. This is, you know, a selling candle. Then the candle that is preceding covers this body completely. Or not to engulf means to cover completely. So the body of this candle is covered completely. So you can take for those people who could have taken the trade from the rejection candlestick formation, then they were taking there, and you target the next eye, which is that point, putting a stop loss relatively that low. For the rest who are waiting for the bullish engulfing candle, also they take their trade there, and you see they all get the same result. However, the first one would get some relatively higher pips than the second type of a trader. But all this is a very, very easy strategy for you to use. And I said this one is best used by scalpers. Please, this one is best used by scalpers because you want to come to the market quick time, you know, get all this profit, then exit. Remember, because it is a easy one and playing out many times, you don't have to stay in the market for long. Just plan your day well, wake up, do other things. If you are a full-time trader, just take your 30 minutes to 1 hour, do analysis, wait for this pattern, you know, to arrive in your chart, then take the trade, get the result that you want, then go home. Remember, this at points, this strategy could also lead to losses. It can also not work out, but many times it has proven to be working out. When I was doing my back testing for this one, I think I'll be sharing that journal with you. I think in 2023 it's when I was doing this particular, but 2022 and 2023, the results for this one was coming at around 67 to 72, 73%, which is way too good. Means if you are taking 10 trades, 7 of them are wins, 7 of them are wins, and that is a very good strategy for you to use. Remember, one more time, this one is for beginners, for those who are using ICT, blah blah blah, so my stories, smart money concept. Your time is coming for my videos, and I'm very much sure that you'll be able to enjoy them. So for now, I'm signing out. Let's meet in the next video. Thank you very much for your time. Thank you very much for watching. Please leave a comment for us. Let's continue growing this channel. Remember, we said this one is purely for educational purposes. It's not a financial advice. But if you would like to hear my advice, not really financial, but my advice about markets and what I think about the market, my view, my stand in terms of whether forex or not, you can always reach out to me through my website micforex.co.ke. My WhatsApp number is there. You'll be able to talk to me one-on-one, be able to explore options on what you can really do in forex and what you can really get in forex. Remember, for you to be able to maximize on profits, you also need other things. There are other factors like a good broker. Okay, a broker that is not going to be extorting you, a broker that is not going to, a regulated broker, and that is why I recommend you to use Poo Prime. Poo Prime is a globally regulated broker with offices almost okay, not all over, but in so many offices in the world. So for you also to trade with my broker, you can go to micforex.co.ke. The first thing you'll see, you'll be able to open an account and you trade with my broker. Very competitive and very good orders for the spreads, and clearly no commission and no swap fees when you are taking your trade. Thank you very much, guys. Continue subscribing to this channel, continue watching this video, and leave your comments for us to be able to know what should we bring to you next time. Until next time, my name is M.I.C. Bye bye.